Hey, what's up guys? So in today's video, I'm basically going to go over some very important patterns that traders need to know whenever you are either day trading or swing trading. Now these are patterns that you are typically using with a candlestick chart, and I recommend that you guys do use a candlestick chart like I have on the screen here. And essentially what the patterns I'm going to go over today are called continuation patterns and reversal patterns. So typically what we have here is we have three different trends in a specific market. So we're either going to have a bullish trend, or we're going to have a bearish trend, or we're going to have a sideways trend or a ranging trend, right? So the market is at any given point in time, the market is in one of these three phases. And it's our job as traders to figure out which phase it's in and accordingly try to judge what our entries could be based off of the current trend. So typically, the difference between a day trader and a swing trader is not only the fact that, a swing trader is holding a position for multiple days, but typically a swing trader is also trying to either find a reversal in a trend or finding pullback entries in that current trend. So if the market's bullish, then a swing trader's job is to find the pullbacks in the market and enter at the pullbacks using one of these continuation patterns that I'm going to talk about today, right? Whereas day traders mainly focus on riding the current momentum. So whatever the market movement is, typically in an intraday basis, on a 1 minute chart, on a 5 minute chart, right? If there's some sort of news on a stock, then most of the time it's typically bullish. So a day trader is kind of applying a similar concept where they're looking for entries in a current trend and they're trying to ride the trend. You can think of it as that day traders are buying high and they're selling higher, right? Whereas swing traders are buying low and selling high, right? They're buying low on the pullbacks on a very long-term trend and buying and then selling at a higher price over multiple weeks or multiple months. And this is very important to understand. I think swing trading is probably more profitable than day trading for a lot of people because of the reduced emotional aspect that there is for swing trading. And I suggest that beginners actually start with swing trading first instead of day trading, because the psychological strength that you need to build to become a profitable day trader and a consistent day trader is very high, and swing trading is kind of the baby steps you need to take to build that emotional strength. So I'm going to start getting into topics now. So on screen, I'm just showing you kind of a summary of what I'm going to go over today real quick. I'm going to show you guys some examples of some real setups that I took in the past, some setups that I also alerted in the Discord chat as well. Team trading, by the way, I'm going to maybe link the Discord in the description. Yeah, if you aren't in team trading, I definitely recommend you join us. We're a fantastic community of traders from different types of experiences, and we're helping everybody grow and learn together. So today I'm going to go over continuation patterns and maybe some reversal patterns as well that I found from my history and from some of my documentation of some trades that I took in the past. So let's get started here. So I have a whole list of stocks that I want to go over. First stock I want to go over is VTGN. So one of the continuation patterns you might see, guys, here is the ascending triangle, this guy right here. So the ascending triangle is one of the best and the strongest continuation patterns in my book, personally. So essentially, a continuation pattern is when you are in a current uptrend or a downtrend, and this specific pattern is going to essentially allow you to get a better entry for riding the momentum of the current trend. So the ascending triangle is essentially when a price is making a higher low like this. So you have a trend line on the bottom of the price. So this is a daily time frame. This can be applied to any time frame, but for swing trading at least, the daily and the weekly time frame is the most important. So you want to focus on those time frames. So an ascending triangle, just like it sounds like, is when price is ascending at a constant rate, but you have a flat top where price is constantly getting rejected at. So if you look at this right here, you can see that we have this resistance zone on the daily chart. For multiple months, we've had this resistance zone. But over the same period of time, the price has actually made higher lows. So essentially what's happening is price is kind of squeezing in this tight range right here, right? And what happens is when a price is squeezing in a tight range, there's a very high chance that there's going to be a big move coming in the price in either direction in the very near future. That's one of the main reasons why I alerted VTGN in our trading Discord, was because of this ascending triangle setup. I've historically played a lot of ascending triangles, and these are some of the best swing trading setups out there. I can guarantee you that. So the way you play an ascending triangle is you have two different entry opportunities on an ascending triangle. The first entry opportunity you have is you enter on the test of the ascending trend line. So in this case, this blue line at the bottom, this is our ascending trend line. So you can see if we bought here, we could have ridden this move up. If we had bought here, we could have ridden this move up. If we had bought here, we could have ridden this move up, right? And if we had bought here, we could have ridden this move up. So I alerted VTGN around this area, and as you can see, this is exactly the same point where the trend line is kind of being tested at. And you can see we also put in a doji candle right here, which is also a reversal candlestick pattern that I'm not going to go over today. I'm probably going to go over that in another video later on, but candlestick patterns are also important, but that's besides the point. But essentially what I'm trying to show you guys here is that the ascending triangle is a very strong pattern that you can apply for swing trading. So one of the entry points could have been at the test of this trend line. You can see if you entered here, you could have made a lot of money. Now the second point that you can enter at is when price closes above this resistance level. So this is the flat top resistance level, which is the highlight of what an ascending triangle really is. And you can see when this candle closed above this resistance level, you can see VTGN absolutely rocketed to the moon, right? And not only was this just a technical breakout, and this could have been a fantastic entry zone for you, this was also accompanied by some very strong catalysts. And catalysts are typically found for conducting something called fundamental analysis, which is something I'm going to go over very soon as well. But this is just one of the best entry setups that you can have is an ascending triangle. Now the second setup is something we call a flag or a pennant. Now these are also continuation patterns, and as you can see right here, but I kind of like to group these in kind of one similar form factor because these look very similar, a flag and a pennant. They're not the same as an ascending triangle. They're much more short term, but flags and pennants are essentially when price is consolidating in a tight range for a short period of time, right? But it's not actually pulling back as much as like a ascending triangle pullback would be, right? Instead, it's pulling back in a tight range, and it's potentially getting ready to basically make a move higher very soon, or a continuation of the current trend. So what's happening here is, right, so this is a stock that I alerted back in November, I think it's OVID. And one of the reasons why I alerted this is because I was seeing a flag pattern formation. Now, just like it sounds, the flag pattern is essentially when you have a big move in price like this, and the price is kind of just trading sideways like this for multiple days or multiple weeks. This can also be applied to day trading, but right now I'm just focusing on swing trading. But essentially what's happening is price is consolidating sideways in a formation. And this is a bullish indicator of price, because what's happening is the price is actually not falling sideways. It's not coming back down and testing the low support area right here, right? This $5 zone. Instead, what's happening is price is actually just trading sideways with these huge wicks on the bottom of the candles, which is showing a lot of buying pressure. So price is consolidating sideways, and the best entry point for a flag breakout is when the price breaks above this resistance, which is this blue line right here. So as soon as price broke up at the resistance, we're going to take an entry, and we're going to ridden this all the way up here for a multi-day swing. This could have been a fantastic overnighter. I think this is like a 20-30% swing. Not bad for just a couple of days. But this is, again, a fantastic example of what a flag looks like. And one of the key things you want to also keep in mind in a flag is you want to see that the volume is actually reducing inside the flag itself. So you want to see a big volume push on the initial flag movement. So this area right here, when the price goes up, you want to see a huge amount of volume there. But inside the flag itself, you actually want to see a lower volume compared to what the previous volume was outside the flag, because that just shows you that the price is not going to pull back in a big manner. It's actually just consolidating for potentially like a bigger move in the future. And that's exactly what happened here with OVID. Now, another pattern I want to go over, which is a final continuation pattern, is something called the symmetrical triangle. The symmetrical triangle is also a fantastic continuation pattern that I really, really love. And this is a very similar concept to what a flag might look like or a pennant might look like, but it's actually on a longer term time frame. So let's pull up the continuation pattern number 4 here, which is the symmetrical triangle. So this is kind of what a symmetrical triangle looks like. This is ticker symbol JKS, and this is a large cap that, as you can clearly see, had a very strong uptrend, right? For multiple months, it had a fantastic uptrend. Now, what happened is, obviously, a stock doesn't go to the moon in a straight line, right? The stock has to pull back. It has to, spend some time accumulating shares, right? Breathing in and then breathing out. So it needs to breathe in the form of a pullback. In this case, the price is pulling back in terms of this ascending or the symmetrical triangle, which is a bullish flag formation or a bullish continuation pattern. So a symmetrical triangle is very similar. It's essentially just a triangle that's forming on either the 1 hour or the daily chart. That's typically the best time frames for an ascending triangle in my experience. And what's happening is you're having the price kind of just coil up in this kind of a triangle formation. So you have these two sides of the triangle that you can identify using the trend line. And the way you play a continuation pattern like this is you only buy the breakout in one of these patterns. The symmetrical triangle is not a pattern that you buy the test of the support like you would in an ascending triangle. In this case, you simply buy the breakout. So the breakout in this case would be a close above this blue trend line, which is the top trend line, right? If it closes above that, that means that the sellers have given up and that price is probably going to go higher. And this is exactly what happened here, right? We wait for this close above the trend line, right? We could have taken an entry or a swing up here and after hours or right before the market closed, and boom, you can see price rocketed high for the next few days. You could have sold at the top, right? Made a lot of money for a very, very short-term swing here. And if you notice again, if you watched my previous class, you could have noticed that this is actually a resistance area right here, right? This is where price got rejected once. And you can see, if you wanted to time the selling point for this specific trade, you could have found out the selling point just by looking at this resistance zone previously. And that's exactly where you could have timed your sell point. And you could have perfectly timed the sell and then waited maybe for another entry at a cheaper price for a long-term investment or a long-term swing. Now, another pattern, another pattern I want to go over now is a trend reversal pattern. These are either head and shoulders patterns or double tops and double bottoms. You want to focus on the double bottoms for a lot of the penny stocks that we play. The penny stocks that we play are typically bottomed out. They're very, very, they're very, very tight, consolidating. They typically have a long-term downtrend, and double bottoms can signal trend reversals on a lot of these small cap pennies that we play. And you also want to focus on the inverse head and shoulders pattern. The inverse head and shoulders is exactly the same as a head and shoulders. It's literally just flipped, but the concept is the same. So let's go over the head and shoulders pattern. So this is what the head and shoulder pattern looks like. This is exactly what it sounds like. It's essentially two shoulders on the side of the chart, followed by this big head in the middle. So, the way we name these, it's kind of funny. The way we name these patterns is literally by trader psychology. We're using psychology to understand how the market's probably going to play out in the future. So what's happening here is you're having the market in this euphoric mode on HYLN, right? Huge euphoric move up, then profit taking, right? People are trying to buy a little bit, then again another euphoric move up, right? And then again a lot of flagging, right? No clear direction on what the price is going to do, and then a lot of profit taking, a lot of panic selling, a lot of profit taking. Then what happens is then once the price comes back to the same support area, right, that we saw in the past, right, we can see that the buyers stepped into the market and they started bidding the market higher, and you can see that we had this big move up, right? This wasn't a euphoric move like we had here or like we had here. This was just consolidation and institutional and even retail investors just buying the stock, thinking this is a good price to enter, right? And this is exactly a perfect formation of a head and shoulders pattern. And this is, by the way, this is a bearish pattern. So bearish means if you see a breakout on this pattern, then you are actually going short if you want to take that entry, or you just hold and don't enter the position because there's a chance that the price is actually going to go down a lot more than it already has. So in this case, what happens is we have this little bit of buying, but then again, there is no value in whatever stock there is right now, right? Whatever stock we're looking at. And in this case, HYLN for some reason didn't have that value or that appeal to investors or the market makers. So instead of people buying the stock up, right, and just turning into an actual reversal, the market just sold off again, and we got a lot of panic selling because there's a lot of bag holders in this specific stock. And now this is what we call the neckline of the head and shoulders. So this is essentially the point where if we break below the support area, this blue line, then that is considered bearish, right? And then you are essentially either going to swing a short position, which is not something I recommend, or you just stay away from the stock and don't enter. Or another thing you can do is you can set your stop loss below this neckline. This is usually a very good area to set your stop loss below. And in this case, you could set your stop loss below this neckline, and you could have been saved from losing a lot more money, right? If you had entered at the support zone, maybe here or here or here. So in this case, you can see price closed below that level, and you can see it sold off for a long period of time. Kind of just consolidated, right? Sold off, consolidated, sold off. It's really not showing a lot of strength right now, so I wouldn't be, looking for an entry on this anymore. Unless it can get above this level right here, this level again, this $17-18 level, I wouldn't touch this stock specifically. But in general, this is a good example of what a bearish head and shoulders pattern looks like. Now let's look at the other patterns. Another very important pattern you can look at is a double bottom and a double top. I actually don't have an example to show you guys because I haven't traded this example too much. What I can show you guys is I can show you guys what it's supposed to look like. So this is essentially what a double bottom or a double top looks like. What you have is you have price comes down, bounces at one point, right? Can't make a higher high than the previous high, then comes back down again, makes another bounce at the same price level, right? And then bounces higher. And in this case, what happens is it actually makes a higher high than this previous high. And this is when you take the entry on a double bottom, which is a bullish reversal indicator, right? So you don't take an entry at the double bottom itself, right? So typically what people misunderstand about this pattern is they typically buy when the price comes down here, right? So it comes down, bounces once, comes down again, bounces twice, and people buy here. But the real confirmation on a bullish double bottom is the break of this resistance area. So the break of this previous high is when you want to enter on a double bottom. That's your confirmation. And this is going to be working, 70% of the time. This is a very, very trustworthy pattern. And same with the double top, which is the bearish pattern, which is essentially this one flipped over. Again, you're waiting to enter at the break of this low, right? This low, this price level low. You break for that. That's when you would take a short position, or you would just stop out completely, because this is a reversal, right? The market's in a bullish uptrend, right? But it's getting rejected by this area multiple times. And, that's a very good sign that the sellers are starting to take control of the market, and that the bulls are kind of giving up, which is not a good sign. And this can also be applied in a triple format here, like you guys can see. Triple bottom, triple top, same concept. You want to wait for the break of this area right here, this support or this resistance area, right, like here. And then I can also show you guys exactly a kind of like a generalized look at what an ascending triangle looks like. So just like I showed you on VTGN, higher highs and higher lows, right, or higher lows actually. But a kind of like a flat top on the highs. And then same thing with the symmetrical triangle right here, which is what I showed you guys on JKS. And this can be applied for both bearish and bullish formats, as you guys can see, right? You want to wait for the breakout on the top trend line. Same for a short-term position, a break of the bottom trend line on this specific ticker. So those are kind of the main patterns that I wanted to go over today with you guys. Again, you guys can take a screenshot of this, or I will post it in the Discord as well. And on my Twitter, I will post like a document where I kind of summarize all these patterns and what you're supposed to look for. But just use these patterns on your swing trading and day trading, and kind of, look back at your previous trades, look back at tickers that I've alerted or different people have alerted in the Discord, and look at, what patterns did they see, right? And do any of those patterns fall in line with what I've taught you guys here? Because a lot of the patterns that we use here are very, very popular, and you need to know these patterns to really kind of be an independent trader down the road and be a little bit more consistent with the probabilities in your trades, because these are very high probability setups that I'm showing you guys here. These are setups that are used by a lot of market makers, a lot of institutional investors as well. So whenever you're playing one of these setups, you have a high chance of either making money, or a high probability of the stock moving in the direction that you expected it to move, right? Which is just a fantastic way to learn and grow your trading experience, in my opinion. But that's kind of it for this video. I'll make sure to schedule some more videos over the next couple of days. Going into next week, my plan is to maybe make a video on how to use a scanner, and then also how to just conduct fundamental analysis on tickers. And then maybe in one video, I can also go over how to read candlestick patterns. But if you guys have any suggestions on what I should make, just let me know on Discord, or just comment down below on this video. And then I'll make sure to listen to you guys and provide whatever content you guys really want me to do, because I'm going to be doing essentially, what you guys want to learn. And I'm just here to kind of help you guys out, explain the topics through YouTube videos, which I think is a pretty good platform to kind of explain everything. But yeah, that's going to be about it for me today, guys. I hope you guys have a fantastic new year. Set your New Year's resolutions, set your goals, and I hope we're going to kill it this trading year. It should be a fantastic year, a lot of opportunities down the road. So yeah, good luck, guys, and I'll see you guys later. Take care.